So let's just go over why I took the short trade today. So basically you can see that price was bearish for a while, right? You can see on the left it tapped into a bearish 15-minute FEG, and then from there it continued lower. So then you can classify that swing high in the bearish FEG as a protected swing point or a failure swing in the market, right? So as you can see, as price was bearish, it created Asia low, and then it basically retraced up and it inverted the bearish 15-minute FEG resting below. So we're not bullish yet. What price was basically doing, it was retracing in order to retest that protected failure swing, right? So if price reverses, and then it's either reversing to reach up and fail to take a protected swing, putting in a continuation swing of the already established trend, or it's going up to only sweep that protected swing, which means that the swing is still protected because it only swept, it didn't displace. So if it's a sweep and then it continues the initial trend after that, it still means that the swing is still protected. And then the third one is it's either going to displace over that swing, changing order flow. So you can see price basically reached up into that failure swing level, that protected failure swing, or that swing high resting in the bearish FEG. So it reached there in order to potentially displace above that swing so that it can change order flow, right? But as you can see, price failed to do that. It reached for that protected level but failed to reach it, and also it failed to even sweep it. So then from there, that failure swing then also becomes a protected failure swing, right? But how do we confirm that it's a protected failure swing? So we can move on to the 5-minute to get this confirmation. So now on the 5-minute we can see and have a clear and better description of what market structure looked like after price reached for that protected swing high resting in the 15-minute bearish fair value gap. And we can see exactly what price did after in order to basically confirm that we have a new failure swing or a new protected swing to continue the downtrend. So as you can see, we got a 5-minute change in state of delivery, a 5-minute bearish change in state of delivery, along with a 15-minute bearish fair value gap, followed by another 5-minute bearish FEG. From there, you can see that price swept sell side and then was met with expansion again. So now a lot of people, they would immediately go long, because what did we see? We saw that price basically inverted the 5-minute bearish FEG, right? But what people often don't see, what people forget, is that in order for price to actually go from bearish to bullish, we still need to get past all of those bearish POIs, all those bearish points of interest that is resting in the premium of the sell leg, right? So if I'm really going to be bullish, I want to see not only that 5-minute inverse of the 5-minute bearish FEG, I want to see price displace through that 15-minute bearish FEG, as well as that 5-minute change in state, right? Because I have a newly anticipated swing high of the fact that we failed to take the protected swing high that was resting in the 15-minute FEG, the 15-minute bearish FEG. So as you can see, price retraced. I tried to take that level, but it failed because there was a 5-minute bearish change in state and a 15-minute bearish FEG in its way. So then as you can see, price was failing, right? So if I wanted to get a better entry now of this level, what do I want to see? I want to see price trading into that premium of the bearish leg, into that 15-minute bearish FEG and 5-minute change in state of delivery, and then I want to see bullish POIs get disrespected in order for me to then confirm that the failure swing is a protected level, so I can take the trade lower. But now as you can see here, we don't really have any bullish POIs in order to disrespect it, right? All we have is a 5-minute bullish change in state that price created as it inverts the 5-minute bearish FEG. So if I want to look for a better entry and look for bullish POIs to get disrespected, I will then move down to a lower time frame. So from here I went down to the 1 minute. Okay, so now on the 1 minute we get a clearer description of what market structure looks like after it traded into that bearish POIs, after it traded into the 5-minute changing state of delivery and 15-minute bearish fair value gap, right? So as you can see, price traded into the 15-minute bearish FEG, and then it retraced into a 1 minute and 3 minute bullish FEG, right? So as you can see, price was respecting it for a bit until it traded into the 5-minute bearish change in state. After that, price struggled to displace higher. It couldn't go higher, right? And then I was looking at the internal swing. The internal swing in this case being the higher low that basically caused the move higher. So the reaction of that 1 minute or 3 minute bullish FEG. So when price traded into the 1 minute and 3 minute bullish FEG, it left behind that internal swing, right? So why I was looking at that point in price action was because if I wanted to see price trade higher, I would want to see that internal swing point basically get used or get treated as a support level in order to push price higher, to disrespect those bearish POIs and then displace above the anticipated protected swing in order to confirm that we have changed order flow. But as you can see, price failed to do that, and as soon as I saw that price was displacing below that protected internal swing, as we anticipate that if price was bullish, it should then protect that internal swing in order to push price higher. Once it failed to do that, that's when I entered short, right? So as you can see, price traded lower than the internal swing. It left behind a bearish 1 minute FEG, so price swept the internal swing. I traded into the 1 minute bearish FEG, and then from there the rest is history. As you can see, price just continued lower up until it consolidated for a bit, swept the highs, and then continued lower, hitting take profit.